We have the NASDAQ at 52-week highs, some giant earnings this week. We have hedge funds betting in giant numbers that oil prices will crash. And while all this is happening, there's still that huge risk that the United States defaults on their debt. So in today's video, we have a lot to go over. We have some exciting setups in the stock market for tomorrow and throughout the whole week. So make sure to stick with us. And at the end of today's video, we have a nice treat with a big money $7.7 million trade you won't want to miss. So with that being said, Tom, let's get right into it.
Yeah, definitely, Mike. Like you said, the QQQ is at 52-week highs, and we have so many interesting things to talk about today. First off being, Mike, I think that bearish oil position is actually insane that we're seeing right now. So we're actually seeing a big bearish oil bet. And whenever we look at oil over times of high inflation and obviously times where the U.S. has went into recessions like in 2020 and 2008, oil actually took a huge dip to the downside. Now, this does come with some risks, of course. Like obviously, if you're playing oil to the downside, there could be chances that OPEC might actually look to maybe like cut production and raise the price of oil back up a little bit. But it's very interesting to be seeing hedge funds betting against oil like this, Mike, especially whenever oil is actually pretty low from its recent high up around 120 to 128. A lot of people have been thinking that we might double bottom here and move back up. But it's interesting because if we do go into a recession, as we can see in 2020, how oil prices really sold off, and even these futures went under zero at one point, which was insane on some of those expirations. But it was just an insane time during that recession with oil prices falling. And I think that that could happen again here. And we're going to talk about a ton of stuff throughout the video with the debt ceiling and possible recessions coming up as well. So keep that in mind. Stick around with us. But man, Mike, this oil play seems pretty big here on the market.
Well, let's go back in history, Tom, and let's look at, like, let's say the 2020 recession, and let's circle it. You could see that basically when we went into recession, oil prices tanked down in a major way. And just like Tom said, they actually went negative for some time. But even if we go back to like other recessions, like let's say the Great Recession in 2008 and 2009, oil prices also dipped big time back then as well. And these were both, decent sized recessions. So, traders are looking at oil right now and saying, you know what, if we go into recession again, in 2023 or maybe even in 2024, oil prices will probably dip back down. And that's why hedge funds are trading oil in such a bearish way. So that's the scoop there. Of course, it's definitely something you want to keep in mind because, oil prices have a giant impact in the economy, whether it's everyone's everyday, gas bill or whether it's airlines paying for their jet fuel or honestly anything else.
Yeah, exactly. Jet fuel comes into play here really largely also. And, we're getting into these summer months where there's more travel and stuff like that, where we're using more gas. So I'm very curious to see where oil goes here, but it's huge to see, a big bearish bet against oil like this, especially on the futures contracts. It's crazy to see that. And I'm really hoping that they're right, because you know what? I'll take some lower price gas, but then again, I'm not sure I want to go into a recession. And talking about recession, Mike, man, we keep hearing so many things about the debt ceiling, and Janet Yellen's been talking a lot this weekend. Biden and McCarthy were talking a lot last week. It's just, man, we're hearing so much about the debt ceiling, and Yellen's saying today that hard choices will need to be made if these bills go unpaid. I know last week, Kevin McCarthy and Biden actually spoke, and they said that the U.S. won't default as debt talks inch forward. I saw an interesting bullet point today, Mike, where Kevin McCarthy said that the White House has actually moved backwards now. So, man, it looks like Yellen is kind of trying to scare people here, and it's definitely getting to that scary point. We're getting closer and closer to June 1st, and obviously, early June, mid-June is going to be catastrophic for the stock market if this does not get done sometime soon.
Yeah, like literally, if there is not a solution to this debt ceiling being raised, it is like almost, I can't even really describe how bad it would be for the stock market. And look at this tweet by a Watcher Guru where they reference how the White House previously said that the stock market will crash by over 45% if the U.S. defaults on its debt. And on top of that, they also said that Americans will lose around, or I guess you could say 8 million Americans will lose their jobs. So it's definitely a huge risk that we have outstanding, and it's definitely something we have to keep in mind as we get closer and closer to like the first couple weeks of June.
Yeah, we do. It's a big thing right now, Mike. And Biden just said today that Republicans need to move from their extreme position. So it sounds like that there's obviously a pretty big discrepancy between, both sides here. So I'm really hoping that something gets done soon. And what's been interesting, Mike, is that, as this has been going on and as we've been getting this news coming in of this potential default, what's happened? Look at this. We've been seeing the QQQ run up to new 52-week highs, Mike. So far, the market hasn't really cared too much. And we keep seeing stocks like AMD, NVIDIA, other stocks like that continuing to rip. I mean, NVIDIA from its low to high, Mike, is still blowing my mind here. It's up 190+% right now from that low back in November. And they're actually reporting earnings this week. It's an insane time in the stock market with all these bad events going on. So I feel like at some point here, we're going to start to dip down. But what's interesting is SPY just started breaking that recent resistance on Friday. So it's like, even though there's all these bad events, the market just keeps going.
You gotta love it. It's like you have literally some of the worst potential news brewing behind the scenes. And like you said, you have stocks making 52-week highs, up basically 200% and still running. The S&P 500 on a huge breakout. It's just, that's just how the stock market is sometimes. Gotta love it. And, I know you mentioned a couple of these big tech stocks like NVIDIA, they actually are set to report earnings this week. So what else do we have on the schedule?
Yeah, it's huge, actually. So it looks like we have Zoom coming out tomorrow and after hours. That's going to be big, Mike. I know that we talked about Zoom a lot over the past couple of years. They've been pretty low this year. Maybe they can start to make a little bit more of a comeback. They've been coming back pretty good, though, the past couple of weeks. Then we have Lowe's and Dick's Sporting Goods, BJ's there on Tuesday before market open. In after hours, there's not really too much. Palo Alto, I've heard some people talk about that one. Toll Brothers. Wednesday, though, is going to be huge. So before open, we have Analog Devices, Kohl's, and XPeng, which is XPEV, for anybody who doesn't know, a Chinese EV company, even Petco there. In after hours, though, we have NVIDIA, Snowflake, Splunk, Digital Turbine. Man, Mike, that's going to be a pretty big day. NVIDIA and Snowflake are some of the most popular stocks. NVIDIA has to be my favorite one this week by far. They're one of my all-time favorite stocks, but with a second close is going to be Costco, Thursday and after hours. I do like that one as well. There's quite a bit of earnings here, Mike, and Wednesday's the big day for tech, it looks like.
No doubt. Yeah, Wednesday's a huge day by far, in my opinion. NVIDIA is such a powerhouse and everyone's going to be watching them super closely. It's crazy to think that they're up almost 200% since, October or November. And what's very crazy is I was looking at this chart from Charlie Bolello. Basically, he posted that just goes to show you how, at least historically, overvalued NVIDIA is right now. Their price to sales ratio is basically 30, and the median price to sales ratio in the NASDAQ is like 5. And their price to earnings ratio right now is 182. So basically what this means is that the market is expecting a ton of growth for NVIDIA. And as long as NVIDIA keeps growing at an insane pace, it's possible for the stock to keep going up. But it's like, NVIDIA can report good growth, but if it's not good enough, it'll be very easy for the stock to fall. So basically, they're trading at an extreme valuation, and they really need to put up some very impressive numbers in order to keep up this type of price action.
Yeah, they really do, Mike. And looking at the stock right now, it's almost getting back to all-time highs. I mean, the all-time high, we had a big wick extending up to like 346, 345. But there's that big area there up around like 330. We're actually getting pretty close to that on the daily chart, which is insane to say for a stock like this. And, with all the default news and stuff like that going on, I'll be honest, I have to expect a pullback on this one sometime soon. If we start to see the overall market start to tank down with some of this bad news of maybe the default not getting avoided, obviously, totally, or maybe as we approach that deadline and volatility comes in, I think that some of these stocks might start to fall, and NVIDIA is one of the ones that I think definitely could, but I love them for the long term, Mike, but in the short term, they are definitely way overextended like we've been talking about, and that's a pretty crazy chart. Just a few months ago at Lowe's, they were trading around 10 on the price to sales. Now they're all the way back up to 30 again. This stock has just been so volatile this year.
You know it. So good stuff there. But Tom, it is now time for some setups for tomorrow. One stock I'm watching very closely is NIO. This stock had a decent day on Friday, popping for around 3.2%. It's very low right now, and they're starting to get some of their bullish momentum back. Overall, I really like the risk reward setup with this stock. Right now the stock is lingering right around $8. You can put like a stop loss right around like $7.20 or so, and you might look to take profits closer to like $9.50 or even like $10.50. So it's like a good risk reward setup.
Yeah, I really like this one. I like how last week it was starting to pull back a little bit. A lot of these stocks have been trading with some of these good trend lines lately, and it looks like NIO starting to kind of pop out above that little trend line there. So, and I also love NIO, Mike, because it has a very weak correlation to the SPY. So if the SPY goes down because of a potential default, NIO might get affected a little bit, of course, but to be honest, I mean, it's a China stock. Like, really, our default will affect China, but at the end of the day, NIO kind of moves how it wants. So I like that with them. And with the potential default and everything like that going on, I'm actually looking at UVXY this week. I noticed on Friday, UVXY started really popping back to the upside of 3.53%. And we started to finally see a pullback out of the market, Mike. Like, we just keep going up and up. It was good to see us finally pull back. So if we see a pullback out of the SPY again tomorrow, and we see UVXY running, I think it can make for a pretty good potential day trade, considering, the volatility coming in with some of this bad news. And it seems like over the weekend with Yellen talking and stuff like that, it hasn't really helped the situation.
All right, yeah, definitely keep UVXY on your radar because, if shit hits the fan, this ETF will boom to the upside. Another stock I'm watching is Google. This stock is very overextended to the upside, and I'm actually looking for a pullback on this one. So ideally, if you're an advanced trader, you might look for a call credit spread, but if not, you can also look at puts for this one. Like I said, the stock is super overextended to the upside. It got rejected really hard off that 125 resistance level, and I can see it coming back down pretty decently. So especially if the market falls, especially if the market falls too, this stock can definitely pull back, and I wouldn't be surprised if it retested like the 118 area.
Yeah, it's been pulling up a ton lately and just barely got above this trend line here. So I'm wondering if maybe we'll fall down as well. It's definitely getting very overextended for Google and a few other of these tech stocks. It's just insane to see them up as much as they are. And I'm with you. I'll definitely be watching it for some puts. And, this next stock that I'm going to talk about is not necessarily, it's not necessarily anything big like Google or UVXY or anything like that. It's Coinbase. Okay. So they're going to be affected a lot by what happens in the crypto sector. I noticed, Mike, that this weekend there was actually some news with Biden and crypto where Biden said he's not going to accept one of these deals for the debt ceiling if it protects crypto traders. I don't know what's up with that, Mike, but that definitely scared me when I saw that for Coinbase. And Coinbase is sitting right on big support, right around $56.50. So if we break below there this week, I think there could definitely be a pullback. And we've even had lower highs recently where there's been multiple rejections overhead. So if we fall under this support, definitely watch for it with that news that came in.
All right, there we go. Well, it is now time for the momentum plays. With the first one, we have Microsoft to the downside.
MSFT, I will say, Mike, I was eyeing this one up on Friday so much. Our bot called it out and it actually did pretty well, but bounced off support and kind of ripped back up at the end of the day. If we see Microsoft fall under 317.50, which is a pretty good intraday level, I'm going to go ahead and look at some puts to the downside. I think that Microsoft has been really consolidating here a little bit too much.
All right, with the next one, we have AMD, also to the downside.
AMD, yeah, we're looking for this one down just like NVIDIA and the others. Go ahead and make them break below 104.25.
All right, and then with the last one, we have Tesla, and we need both directions.
TSLA, yeah, this one just keeps going up no matter what it seems like again, just like all the others. If they break above 181, go ahead and look at some calls right around that high of day on Friday. But if they fall under the intraday support right around 178.70, then go ahead and look at puts to the downside. So 178.70 down, 181 to the upside.
All right, so you guys heard Tom. We have that upside level. If it breaks above that, we'll watch it for calls. We also have that downside level, so if it breaks below that, we'll watch it for puts. And then don't forget about AMD and Microsoft for put plays if they break below those lower levels. but it is now time for my favorite part of the video. And Tom, today we have a giant big money trade totaling about $7.7 million. So on Friday, $7.7 million went into Zillow, ticker symbol Z. More specifically, it is a call debit spread, and if you don't understand how options work, don't worry, I'll break it down in a nice and easy way. But essentially, someone bought the 45 strike call options that expire on January 17th of 2025 and shorted the 70 strike call options that expire on January 17th of 2025, totaling about $7.7 million. Essentially, this is a bet that Zillow stock will rise. So you can buy shares of Zillow, you can buy calls of Zillow, you can sell puts on Zillow. It's all has a somewhat similar exposure. The main thing to know for this specific trade is that the maximum profit point will be at or above $70 a share, but this trade can still be very profitable at, let's say, $60 a share. So the main thing is that we have traders betting that Zillow stock will boom between right now in January of 2025. There's a lot of time to this trade, Tom, so it gives me more of like a, I don't want to say like longer term type trade because like a couple years isn't that long term, but still, this trade will probably take some time.
Yeah, like initially whenever I heard this and you were saying it needs to be up around $60, $70, I was like, dang, with this default and with its correlation to the SPY, I don't know. That sounds kind of rough right now. Some of these tech stocks pull back, but Zillow is in a special type market, being the home, or I guess you could say like the housing industry. It's definitely a pretty big market out there. So I'm very curious to see what Zillow does. I love it that they have a lot of time, Mike. That really makes it so that the next 6 months to a year aren't really even relevant for it. If they're looking to hold it out to 2025, that's definitely a long time. So I like the play, Mike. I think that by that time frame, we'll definitely start to beat back up into these areas, even if not soon. To be honest, it seems like Zillow's been really consolidating down here, and there's been some pretty good supports it's been bouncing off of too, and it seems like it's trying to stage a bit of a comeback here.
Yeah, so it's interesting. And when you look at Zillow stock on like a longer term basis, you can see this stock has been growing very steadily for years. And then in 2021, it just crashed down. I mean, Zillow stock was at $208 in 2021. And since that point, it has just been crashing down basically nonstop. It has lows of around, you could say, $26 a share that it made in October of 2022. Right now, it's up to 45. And, you got traders betting some pretty big money that this uptrend, the short-term uptrend will continue. So it's definitely a very interesting setup. And, $7.7 million is definitely on like the higher side big money setups.
Yeah, it definitely is. And it's a call debit spread, so a little bit safer than just straight calls for him too. So I like that. And there has this big gap to fill on the daily chart too, between like 70 and 90. So maybe we'll start to fill that over the next couple of years. Usually those gaps do start to fill over time, especially on stocks that are, tumbling down this hard. But I like it, Mike. It's a lot of money. And like we said, though, the default might cause some volatility on it in the short term, but I think that as time goes on, that play will do just fine.
There we go. All right, Tom. Well, we're set for a pretty exciting week, especially with NVIDIA earnings. Of course, the risk of, I guess you could just say like the bad news surrounding this default potential. We have stocks that, and it's crazy to say, but 52-week highs right now. So I think we're set for a very interesting week. Do you have any final thoughts before we close out?
Yeah, it's going to be a big one. One final thing, just keep your eyes on gold, guys. I think that as we get closer to this default, more fear is going to come in. I know I already mentioned UVXY as one of my plays, but I just want to mention gold out there as well. I think that some of these commodities like this could really start to boom as the fear starts to come in. And there's a big difference between a lot of these commodities. We talked about oil, right? Oil going down in times of recession, but I would actually look at gold to the upside in times of recession. Look at 2020, 2021. During that bad time with COVID, gold was booming. So keep your eyes on GLD. I think that could be a good sector to maybe hedge your overall portfolio into.
There we go. And make sure, if you are not already, to subscribe. When you subscribe, you'll see our videos recommended to you more often. And last but not least, we want to give a giant shout out to today's member of the day, which is I Rule All in the Stocked Up Discord. You've been in the chat for almost 3 years at this point, and you're still super active to this day. So huge shout out to you. Thanks for being a great member of the community. And besides that, guys, let's have an amazing week.